Crypto bull markets are exciting. Prices are pumping, everyone's making money, and it feels like the opportunities are endless. But if history has taught us anything, it's that bull markets are also where most investors make their biggest mistakes. The decisions you make right now will determine whether you walk away with life-changing gains or end up holding worthless coins through the next bear market, and that's a very painful position to be in. The truth is, most investors don't lose money because they pick the wrong coins. They lose money because they let emotions take over. They get greedy, they overextend themselves, and they forget that markets move in cycles. So today I'm going to break down the most dangerous mistakes that crypto investors make in a bull market and how to avoid them. If you want to actually keep your profits and not just watch your portfolio skyrocket and then crash, this video is for you. The first and most common mistake is believing that prices will always go up. It happens in every bull run. Bitcoin reaches new highs, altcoins are pumping, and suddenly everyone thinks this time is different. The idea of a super cycle starts floating around, and people convince themselves that Bitcoin will never crash like it did before. This is one of the most dangerous mindsets you can have. No matter how much institutional adoption we see, no matter how much mainstream attention Bitcoin gets, there will always be market cycles. That means bull markets like we're in right now and bear markets which are soon to come. Let's look at what happened in previous bull runs. In 2017, Bitcoin ran from $1,000 to $20,000 in less than a year. At the peak, people were convinced that Bitcoin would never see five-figure prices again. But by the end of 2018, Bitcoin had crashed back down to $3,000. In 2021, the same thing happened. Bitcoin ran out to $69,000. People were calling for $100,000. And then by 2022, we were back at $16,000 per Bitcoin. Every time Bitcoin makes new highs, people believe that it's different this time. And every time, the market proves them wrong. The reality is, bull markets don't last forever. And the people who refuse to accept that are the ones who get wiped out when the cycle inevitably turns. The second mistake is going all in at the wrong time. Too many investors wait until prices are already high before deciding to invest. They see the hype, they hear about people making massive gains, and they feel like they're missing out. So they throw everything in at once, often at the peak of the market. The problem with this approach is that it ignores risk management. If you put everything in at once and the market turns against you, you have no flexibility. Smart investors don't go all in at the top. They accumulate when no one is paying attention, and they take profits when things are overheated. So the best way to avoid this mistake is to have a structured approach. Dollar cost averaging into positions during an uptrend is a much safer way to gain exposure. And just as importantly, having an exit strategy is critical. If your only plan is to hold forever and hope for the best, you're setting yourself up for failure and a lot of missed opportunities. Now, the third mistake is ignoring profit taking. This is one of the most painful lessons that investors learn in crypto. During a bull market, it's easy to believe that the money will keep flowing forever. But what happens when the music stops? What happens when that altcoin that was up 500% last week suddenly drops 70% overnight? And you know, we saw this in 2021. People were making millions on meme coins, NFTs, and random DeFi projects, but very few took profits. Instead, they convinced themselves that their gains were just getting started. Then the crash came, and suddenly all those unrealized gains disappeared. So the best way to avoid this is to set clear profit-taking targets. Decide in advance at what price levels you will start taking money off the table. One of the most effective strategies is to scale out of positions gradually. Sell a percentage when your investment doubles. Take more profits when it hits a 3, 5, or 10x. This way, you lock in gains without completely exiting too early. The fourth mistake is over leveraging. This is where things get really dangerous. When people start making easy money in crypto, they start looking for ways to amplify their gains. And that's when leverage trading becomes tempting, but don't you do it. You guys already know how Toby and I feel about leverage trading. Exchanges will offer you 10, 20, even 50 times leverage, allowing you to control much larger positions than you could with your actual capital. Now, at first, it seems like a cheat code. You put in $1,000, and with 10x leverage, you're controlling $10,000 worth of Bitcoin. If Bitcoin moves up just 10%, you double your money. But what most people don't realize is that if Bitcoin moves down just 10%, you get liquidated and lose everything. Leverage trading is how people go from making life-changing money to losing everything overnight. It's greed. And in every bull market, the same thing happens. People take on too much leverage, the market corrects, liquidations cascade, and we see massive crashes. Smart investors don't need leverage to make money in a bull market. If you manage your positions well and take profits strategically, you don't need to gamble with leverage to succeed. And you can sleep at night. Now, the fifth mistake is holding through the bear market without a plan. One of the most dangerous myths in crypto is that you should just hold no matter what. The idea of diamond hands is great when you're in a strong, long-term position, but blindly holding through a bear market can destroy your portfolio, especially if you're doing this with small cap coins. Altcoins, again, are the best example of this. During every bull run, we see thousands of new projects launch. Many of them go up 10, 50, even 100 times in value. But when the bear market comes, most of these projects never recover because they were only launched to take advantage of the hype that was happening during the bull market. Now let's take a look at 2017 in case you don't believe me. Coins like NEO, Icon, and BitConnect were some of the biggest winners in that cycle. But when the market crashed, they never returned to their highs. The same thing happened in 2021 with projects like Olympus DAO and some DeFi tokens. The harsh reality is that most altcoins don't survive bear markets. Bitcoin and Ethereum have proven themselves over multiple cycles, but the majority of smaller projects fade into irrelevance. If you're holding altcoins, you need a strategy. You need to know which projects have long-term potential and which ones you're just trading for short-term gains. And you need to realize the risk of it is if you're holding them long-term. You need to take profits and rotate into stronger assets before the market turns. So what's the right approach to a bull market? Well, it's simple. Have a plan and make that plan before things are crazy. You got to first recognize that markets move in cycles. Bull markets don't last forever, and neither do bear markets. The best investors prepare for both. Second, take profits strategically. Don't wait for the perfect top because no one can time it perfectly. Instead, scale out gradually and lock in gains along the way. Third, avoid overexposure. Don't go all in one price point. Don't use excessive leverage, and don't put all your money into speculative altcoins without a plan. Most importantly, stay disciplined. When everyone is euphoric and calling for Bitcoin to hit $1 million, that's when you should be most cautious. And on the flip side, when everyone is panicking and saying crypto is dead, that's when you should be preparing to buy. And you know that's our favorite time in the crypto market. Now, I know all of this is easier said than done. If this is your first bull market, the cold hard truth is that you're gonna make mistakes. And it's highly likely that you'll either lose money or you'll be left feeling like you didn't take full advantage of the market. Now, if you do lose money, the amount that you lose, that's the cost of your crypto education. It's a lesson that you'll never forget. It's one that we've all had. And if you decide to stick with it, you will be a better investor in the future because of that lesson. Now, if you end up feeling like you didn't take full advantage of the market, then you really ought to consider yourself lucky because you've also learned a valuable lesson. Over time, if you become a long-term crypto investor, you'll realize that timing the market perfectly is not and should not be the end goal. Trying to perfectly time the market is exactly the mindset that will make you far more emotional than you need to be in order to be successful. Now, I want to hear from you because it helps everyone if they're able to learn from other people's mistakes. So I want to hear from you. What mistakes have you seen people make in the past bull markets? Whether you've witnessed yourself or you've done it yourself, have you learned any lessons from previous cycles? Drop your thoughts in the comments below. And if you want to learn more about how to navigate the crypto market without making these mistakes, please check out learningcrypto.com. It's the best place to get real, practical crypto education. Thanks for watching. I'll see you in the next video.